Welcome back to Tech Tune Up with me, Paul Meeks. I'm your host. Try to bring you the latest and greatest in the technology sector and give you some takeaways that are actually tradable. So, first of all, today is January 21, 2025. So, Happy New Year to all of you. We're also one day into Trump 2.0, and I'll talk about that in a little bit. But a couple of housekeeping details first. Number one, we are back on a weekly broadcast cadence. And unless I get hauled away to a very boring faculty meeting, I will see you Tuesdays at 11:30 Eastern Time. Number two, as always, as we go through this broadcast, reach out to us with some questions, and I will try my best and honestly answer them at the end of the show. So, first of all, let's get into some of our stock news stories and broader stock tells. I talked about Amazon in the last broadcast. Now, they had during the Christmas selling season a battle with the Teamsters Union. Resolved now, but it'll be very interesting to see what kind of impact that had on Amazon's e-commerce business. Now, remember, we don't invest in Amazon specifically for the e-commerce business. We're much more interested in Amazon Web Services. We want that to grow faster because it's the highest profit margin business unit by far. And as it grows faster than e-commerce, you richen your overall profitability mix. Among the Mag 7, Amazon right now is actually one of the few that I would buy. You'll see my buy list in a minute. Nvidia is interesting. I actually think Nvidia is a better buy in here. Nvidia stock has really done nothing for a month or so. I think some people decided that they're going to take profits in the name. Not a bad idea, actually, at the end of 2024. But we just came out of the Consumer Electronics Showdown in Vegas. And at that show, CEO Jensen Huang announced some interesting products, including a digital project that is quote unquote digital project, which essentially will be a AI on board, smaller appliance. You can buy it for a couple of grand, although it'll be tailored to scientists and researcher. And if this product can actually take some share away from the CPUs and the market that has been dominated so far by AMD and Intel, this could be a big, profitable, incremental driver, revenue, profits, and cash flow for Nvidia, because this company over time, their AI data center business will slow from a rapid growth rate to something more moderate. And for the company to continue to hold its valuation, it's got to have a couple of new tricks. And this very well could be a new trick. In the meantime, I like Nvidia. The stock is flatlined here for a while. I think it's actually a better buy. Next, Uber. Uber is a stock that I was pretty aggressive on to buy it back before its bounce. Now the bounce is transpired, but I think Uber continues to be interesting. The one thing that bothered me, though, is they were trying to make a pretty large, and when I say large, $950 million worth acquisition of a food delivery company, Food Panda in Asia. And that was actually very weirdly, in my view, blocked by the Taiwanese government, which almost all the time is a U.S. ally. So I thought that was interesting. Stay tuned on that story. Now, with the bounce, Uber may be too late to buy, but I will pounce as we get back a little bit lower. I think it might have a little bit of overhead at its 200-day moving average, as you see here in the note, which is about $70 a share. Now, if it gets up there and it meets a very stiff ceiling, then I get less interested. If we can pound through, break through that ceiling, be a really nice technical indicator, back in adding to my existing position on Uber. AMD looks interesting to me here. AMD is getting hit in all directions. They had a pretty poor quarter, Folks are starting to believe that they're really too far behind Nvidia and AI chips to make a difference. And no surprise to me, their core CPU business, which essentially puts their chips into devices like PCs and smartphones, consumer electronics, hasn't been great shakes for a while. I will tell you this. I am interested in buying AMD back. I've been away from it for a while. I think if it actually gets down to its most recent trough of about $115 a share, I might just hold my nose and buy it because this company will come back. This company is very well led by Dr. Lisa Su. She's an engineer. She seems to have tracked product transitions very nicely over time. And yes, there may be some initial stumbles with their AI offering, but folks will be desperate to have a strong number two to lever their number one relationship with Nvidia. Under Dr. Lisa Su, I guarantee you, AMD will come back. And right now it is a falling life. I don't know where you buy it, but I'm going to probably be a contrarian, go against everything that everybody else says on television and buy me some AMD. Another thing that makes me a contrarian is I think this recent rally in the whole quantum computing stocks complex is a bunch of bullshit. Now, what happened was these stocks rallied late last year when Google announced the Willow chip for quantum computing. And so not just Google getting a little bit of a bump that day, but all these pure play, smaller cap quantum companies like Rigetti and Quantum Computing and D-Wave Computing. And there's even a quantum computing ETF, QTUM. They all got big pops. And these companies, although they'll talk about their technical prowess, I don't think that this is commercializable or monetizable, particularly for these tiny companies, for years. When I say years, I mean a lot of years. In the meantime, the stocks might get another pop up because there is going to be a quantum computing day within Nvidia's big analyst and software developer showdown called GTC in Silicon Valley, and they do that every March. So here we are at the end of January. As we get closer to that event, which will highlight some quantum computing stuff, these stocks might get another leg up, but these are not companies, or they won't be companies for a while. I short that entire quantum computing complex into that, what I see likely hyperbole, likely hype, and likely big blow off top on those stocks. Another stock that I think is shortable, and I try to give you long and short ideas. I do agree with Hindenburg Research's report. They're the short selling specialist on Carvana. I think Carvana is a financial fraud. And when you are looking at short candidates, it's hard to short a stock just because it's expensive. Valuation shorts don't typically work. They have to have a catalyst on the way down. And one of the greatest catalysts is when you find out the company has been bullshitting with its financials. I do think Carvana is a financial fraud. TikTok is very interesting and so much in the news right now. We all know that the president on day one has given TikTok a 75-day respite to find a U.S. merger partner. And I think that it might. The particularly merger that I'm interested in, I think makes the most sense, is not the ones that you read about in the news with that knucklehead from Shark Tank, but with the private for now company Perplexity AI. A Perplexity AI tie-up with TikTok, I think could be super interesting, and that would be the one that I favor. In the meantime, we are rattling some cages because TikTok in the United States has 170 million monthly active users, which we know is more than half of the entire US population. And not only are people addicted to the short videos, but you also have a good slug of Americans who are trying to make their living on TikTok. I hope it actually comes back. I think it's a challenge to our right of free speech. and we'll see what happens. But now that Trump seems to be more for than against, I bet we get a deal in the next 65 days. And here comes TikTok back on your phones. Apple has had some really bad news. And this is the stock, of course, over the years. People love Apple. Stock never goes down. I hold it, but for this reason, I don't have not bought any for a long time. So Apple just got sales data for China for the iPhone for the quarter ended December 31. Now, these aren't unit sales. These are dollar sales. Year to year, last quarter, in China, a critical market for Apple, their iPhone sales were down 18% year to year. Now, to put that into perspective, the global smartphone market has been sluggish, but that particular regional market was only down 3%. So Apple is down 18% when the market is down 3%. I've told you, and nobody believed me not so long ago that I didn't think, at least in the near term, i.e. this Christmas selling season, that AI on board an iPhone or on board a Mac would drive any sales. I think at the end of the line, and we won't see this for years, that for consumer electronics, I'm not speaking for other applications, but for consumer electronics, like your phone, like your PC, I don't know if AI, even though it's going to change our lives just like the internet did, I don't know if it's going to be monetizable. What happens if AI on your phone is just a cool feature, just like the camera was? And all the fanboys that are supportive of Apple are saying AI on the iPhone is going to trigger, which they like to say, the mother of all iPhone upgrade cycles. So far, it hasn't happened. And they said it was going to happen this Christmas. Maybe Christmas 2025. Maybe not at all. In the meantime, you have a super expensive stock that hasn't grown in years. I think it's really interesting to talk about Meta and Mark Zuckerberg, a total conservative pivot to kiss Trump's ass. Unbelievable. And I guess in one sense, you got to give them credit to be in tune with the times. But I have never seen such a 180-degree turn like that. And you're starting to see it not only with Meta, but really the overall ideology of a lot of these execs in Silicon Valley, California, that are movers and shakers. Take a look at all the people that were not just in the crowd, but were sitting behind Trump when he gave his inaugural address yesterday. I do like the fact that not just Meta, but also Microsoft continue, despite their growth, to watch costs. And Meta also announced that it's going to cut 5% of its employees, the worst performers. Hey, it's bad for them. It's good for stockholders to be cost conscious. This is interesting. When people thought that the AI infrastructure building trade was at the end of the line, we have Microsoft announcing that they're now going from an original plan for their fiscal 25 ended June 30 of 25 to spend $60 billion on AI infrastructure, think data centers and Nvidia GPUs. They're now upping it to $80 billion. And as I just said, this is a company that does not have a December 30, 25 fiscal year end. Their fiscal 25 ends in 5 months, and they're ramping up this spending. Yes, I think Nvidia is going to be just fine. And the last thing I should mention is the Securities and Exchange Commission, ever since 1933, requires our publicly traded companies to show us their financials every 90 days. And no surprise, right now we're beginning the quarterly earnings season for companies that typically ended their results December 31, 2024. So far this quarterly earnings season, you always have the banks go first, and they were pretty good results. They were all last week. And in the next couple of weeks, not this week, but really beginning next week, some of our marquee tech companies will be reporting their results. Not only they're reporting their quarterly results for December 24 quarter, but also what they expect, not only for March of 25, but sometimes on these year-end conference calls, they give guidance for the entire next fiscal year. This would be a good time to do it. So we'll see what happens. Tech has done so well. You've done so well in this program with these picks. But I tell you that some of these stocks might have got ahead of themselves. And if they don't deliver what Wall Street is begging for, what I call a big quarter, where they not only crush Wall Street estimates for revenue and earnings per share, but also crush Wall Street's guidance for revenue and earnings per share for the next quarter, you might see some of these stocks come back a little bit of buy the rumor, sell the news. So we'll see. And what I always do is I like to buy some of these names on dips, ones that still have good long-term stories, and I will be here to tell you exactly when. So let's get into some of my tech picks. All right, guys, I try to keep it simple, and this list can change, right? Markets change. The stocks that I focus on, technology sector stocks, are super volatile. So here is my list of stocks that I'm interested in, or if they're red, I'm disinterested in. So the color code is always yellow. They're kind of in my bullpen. I'm interested, but I'm not buying them fresh. Green, if you gave me some money to invest today, I probably would buy them today. And then red are stocks that I've talked about in the past and maybe have even held them in the past, but I've given up on, or they're my most recent short sale candidates. So let's take a look. In the bullpen, we have Micron. Stock is finally starting to work. My play on this one was also always going to be their share of HBM, high bandwidth memory for AI applications. Microsoft is still interesting me, but I want to see a catalyst. I'm waiting on Netflix, and we'll know more because Netflix reports its quarter tonight. I'll be back to you on that. Alphabet and AppLovin. AppLovin is a stock I probably like most out of this entire bullpen list, but the stock has gotten away from me. I had bought some more in the last couple of weeks. I'm waiting for the next dip. Now, on the other side of the transaction ledger, the stocks I would buy today: Meta, Amazon, Nvidia, Broadcom, Taiwan Semi, which just announced a great quarter and great 2025 guidelines, and ASM Lithography, Citigroup, which I made a nice call on because Citigroup had the big upside surprise last week, as I expected. It's the only non-tech stock on my list. I'm glad to have the big pop in the name. Marvell. And then I have really decided to throw in the towel on Dell. Dell is starting to freak me out, and I have a lot of experience in this field. And when the market is telling me something and the stock price chart breaks down, I usually just get out of there and don't look back because I'm getting spooked. Dell has, particularly in the last 5 or 6 weeks, really underperformed its key competitor in these data center servers, which is Hewlett Packard Enterprise's HPE. Now, HPE didn't have such a bad quarter, and so maybe Dell will have a decent quarter too, right? They are essentially two peas a pod. But Dell is getting smoked by Hewlett Packard Enterprises recently. I'm freaked out. I'm going to step away and sell my Dell position. And you know what? When they announce their results, which probably won't be until February, I'll hear what they have to say. If the stock is down a lot and I think it's oversold, maybe I buy it back. I talked already about my short ideas. Listen, I talked about the quantum computing complex. I also talked about Carvana. Tesla is interesting to me. I know. Over time, Tesla has gone up and proved all the short sellers wrong, including some of the most famous hedge fund managers on planet Earth. But this relationship between Musk and Trump, right? Some people are calling Musk, the de facto president or the co-president. In the meantime, Tesla's deliveries in 24 were down from 23. So overall, the EV market globally has slowed a little bit. And within that market, Tesla is losing share. And if they continue to do that, they'll probably start to burn cash. In the meantime, the stock is super expensive. Whether Trump and Musk are buddies or not, Trump did say on the campaign trail that he was going to rescind in the United States the $7,500 tax credit for EV purchases. So that means even with lower prices, demand for Tesla's EVs has slowed, and now you're going to increase with that regulatory change the price of a Tesla by about 10%. That might be too much for some to bear. And of course, Musk and company will tell you that it's not a car company at all, that you should just focus on autonomous driving and the autonomous taxi specifically. I'll believe it when I see it. He started talking about that in 2015, 2016. And when the day comes, yes, there'll be a player, but I actually think the bigger player will be Waymo under the Google umbrella. So stay tuned. Those are my picks and pans, and let's finish up talking about some broader tech trends. Here we go. So the Fed, right? I like to talk about the Fed. It's super important, right? It supports the valuation of my tech stocks. The next Fed meeting is January 29th, right? So not so far away. If you take a look at the CME FedWatch tool, there is zero chance that they are going to lower interest rates again. And remember, part of the thesis prior to Trump's election was that the Fed, after raising interest rates for many years to throw sand in the gears of the US economy, was going to go on a nice streak, which started last September, and lower rates. It looks like some of Trump's policies, of course, some of them are on the come, but particularly tariffs. Tariffs, if implemented, can be inflationary. If you send immigrants out of the country, that can be inflationary in the United States, whether you think it's a good long-term move or not. And if we have a rekindling of inflation, then the Fed will not be able to lower interest rates as originally planned. They might actually have to go back and raise them. And so stay tuned. This easing cycle of softer, more accommodative monetary policy by the Fed, that narrative has changed, and we'll see what happens. I mentioned before, I'm laughing at what I call this tech ass kicking, whether it's Sundar Pichai over at Google or Mark Zuckerberg at Meta. They have become conservatives overnight and steering their companies to embrace Trump and his 2.0 agenda. You know what? If I was the CEO of a company, even if I was liberal and this was all on the line, I'd probably do the same thing. You do know that Jeff Bezos, who's now chairman, not CEO of Amazon, and Mark Zuckerberg over at Meta, each kicked in $1 million for Trump's inauguration held just yesterday. I continue to feel that there's a lot of juice left in AI infrastructure build because I'm seeing the valuations in the private market of some of these AI infrastructure companies, usually data center supporters, that some of them, particularly my favorite CoreWeave, will go public in 25. You're hearing a lot about AI agents, that AI agents are the next move. I think that could be right, but I don't think the next move is anytime soon. I think 25 is another year of AI infrastructure building, and your AI agents will be really cool, but I don't think they're the AI theme that you should be focused on, at least in the first half or so of 25. I told you that Meta was cutting 5% of their heads, and Microsoft is doing the same thing. So if everything was so rosy in tech, why would these guys still be very conscious about their costs? So I think there's some anxiety from some of these tech companies, no matter what they say publicly, no matter how they support Trump publicly, about how his agenda impacts them. One of the sticking points, which is very interesting, is in the United States, we have a program called an H-1B visa. That's where these tech companies, if they can prove that they can't get a smart scientist here within our borders, they're allowed to have an H-1B visa to bring in some tech talent from abroad. Now, Trump had been against. Now with some Elon Musk influence, it looks like he's for. But the H-1B visa program, super important to us in the tech sector. We'll see what happens. A lot of people haven't noticed that, but recently the FCC, which is in charge of this sort of thing, ended net neutrality, which allows the internet service providers now to have more flexibility. And the flexibility means that if they want to throttle back your internet connection, they can. And this was a rule as far as net neutrality that had stood since the 90s. It's been reversed. It doesn't get a lot of press, this thing, because it's kind of a difficult concept to explain, particularly with the regulators. But you guys, a abandonment of net neutrality by the FCC is actually a big deal, real big deal. As I mentioned, I still like AI infrastructure names. People say, well, Paul, you're staying too late at the party. They've already pulled away the punch bowl. I don't know. I thought a tell was that Microsoft, one of the biggest spenders on AI infrastructure and data centers, overnight up to their AI infrastructure spending, and this is money that they're going to spend in the next 5 months, by $20 billion. So yeah, I still think it's the play in 25, at least until we get to the summer of 25. And then, as I said before, let's see what happens with Trump 2.0. There are some pros, there are some cons, and as you know, that he loves to keep people on edge. So I don't think even the people around him don't know he's going to go. Maybe his rhetoric was, more extreme than what's going to happen. Some stuff that can be approved by executive order. Some stuff has to go through Congress. And even though the Republicans control both chambers of the House and the Senate, they still have only a slight majority. It's not going to be easy to essentially get anything approved. There's going to be all kinds of lawsuits going back and forth. We'll see. And particularly the tariffs. The tariffs, if they end up being implemented to the same tune, the same extent, to the same characters as Trump was talking about before he took office yesterday, that could be inflationary. And if it's inflationary, interest rates could rise again, because inflation could rise again. And, that would actually be a problem. So I know there's puts and takes. We'll have to see what happens. So those are my tech themes. And before we conclude, if you have any questions, let's get after them.
Yeah,
All
not
right.
seeing anything come in.
Okay. Well, everybody, remember, we're back to the weekly cadence. So I'm very easily found. Everybody knows where to find me. Take a look at all my content, Benzinga and otherwise, on my LinkedIn feed. But anyway, we will be back again, as I said, until further notice, every Tuesday, 11:30 a.m. 11:30 a.m. Eastern time, and we'll get your questions then. And stay tuned.
2 questions in, if you want to answer them. Okay.
Yeah.
Sorry about that.
Are you still long Netflix? Thanks for the question. I am. I'm very bullish on Netflix, particularly with the catalyst of what they're doing with live programming, particularly sports. I mean, they have proven, not so much with the boxing match, particularly with the NFL playoff games, that they can be a player. And so I'm very bullish on Netflix. However, I never buy a stock so close to a quarterly announcement. And they have a quarterly announcement in a couple of hours. So I'm hoping that my thesis is confirmed. Even if the stock is up, I may buy some more. If the stock gets a dip because it's one of those stocks where the expectations got so high, so no matter what goodies they share, people are somehow disappointed, I probably will buy some. But yeah, I think when it comes to video streaming, it is the only play. Whenever you read about some of these other aspirants like Warner Brothers and some of these other companies, I'd rather short those and just keep going long Netflix. Any thoughts about Vuzi? You know what? I never bullshit people. Some stocks I know like the back of my hand, not this one, or at least not enough to be a good source on. So sorry, brother. Yes, I still like these energy names. I thought the Constellation Energy announcement just a couple of weeks ago, as we got into late 24 with the government, is extraordinary. I do think that we might have done a little what I call take from Peter to pay Paul, which means pull the 25 stock performance into 24, front end loaded. And so going forward, you could say, well, man, with these valuations, aren't these stocks already too expensive? Isn't that theme totally played out? No, I continue to hold those names. And you know what? If they come down, and they will, they're tech stocks, significantly on any dip, I might buy some more. But right now, I just got them in my camp, in my portfolio, but just holding them. All right, everybody. Thanks for participating. We'll see you next Tuesday. I'll have lots of good stuff to share because we will be right in the gale force wind of quarterly reporting season. Until then, we'll see you next week.